Thank you so much. This is very exciting to be here, especially with the two of you. And of course, our session is about Mission 300, which Ajay and Dr. Tah, you know very closely. And for people who may not know, this was launched just a few months ago and with a commitment to power 300 million Africans. There's quite a bit to do, but quite a lot of progress that we've seen over the past few months, which hopefully we can get into. Ajay, I was hoping you could start for us, because you were there in Dar es Salaam earlier this year. Give us a snapshot of what we've seen and what you've been able to achieve.
Yes, I mean, look, the idea was that you can't have a development agenda or story with 600 million people in Africa, essentially with no power. And what I've said from day one, and you know, Sidi has just taken over. You should all be congratulating him because he's going to be an outstanding president of the African Development Bank and a great partner for me. But his predecessor and I had this conversation and said, electricity is a basic right. It's a fundamental right. Because without that, you can't have health, education, anything delivered. And so we tried to go at that and said, let's put a big number out there and see if we can get there. The World Bank had connected 100 million people to power over the prior decade. So the idea was, in our size, was can we go to, say, 250 in 5 or 6 years? And Akin stepped up with 50 and ended up with 300 million, which sounded like a really good number, half the people we would be connecting. That's how it began. It began without the ability to say, we know for sure we're going to get to 300. We might get to 250. We might get to 350. But it's way better than the current rate of progress on connecting people to electricity. The second part was we said we don't want to just connect them to one solar light and one fan, but to give them enough electricity in the house or in the shop to be a productive member of society. A computer, a fridge to open a chemist shop with medicines, or ability to create a hairdressing salon that I saw recently. All of these I saw live in Mozambique recently. And so that is the second part. And then the third part was make it happen at the country level. So make countries own the process with us as a group and say what rules and regulations and policies need to change so that the private sector comes in with the right kind of enthusiasm, because there will not be enough money in either our balance sheets or the balance sheets of those countries. We're going to need to put in large sums of money. And the real numbers are very large. We're talking about somewhere between 40 and 50 billion from the two of us put together over the coming years, another 15 odd billion with the IMF coming to the fiscal headroom of countries, and maybe somewhere between 20 and 30 billion from the private sector in that space. That's what we're up to.
Wow. And Dr. Tah, as Ajay was just alluding to there, you're less than a month into this position, correct?
Yes. I started on the 1st of September.
1st of September. And yet, this seems like a seamless partnership.
But I had the privilege to meet Ajay in July. He was very kind to receive me in his office in DC, and we start talking about Mission 300, because Mission 300 is key for Africa. It's about unleashing the potential of micro, small, medium enterprise in Africa, income-generating activities. As you know, Africa has a demographic dividend to tap. Most of the population of the world will be in Africa. By 2050, we'll have 1 person out of 4 will be African. So we need to be ready for that, and we need to provide electricity for the unserved so far. So far, we have almost 600 million people unserved in Africa. So if we succeed to do Mission 300, that will open the door for more for the continent and for the humanity. Mission 300 is about collaboration. We are partners. We are working with the World Bank Group, but also with other partners to deliver on this mission and to bring the private sector to contribute to the development. Because development is beyond what MDBs can do. It is about partnership, and partnership is key for success. And this is why at the African Development Group, we work with all our partners in the private sector, in the MDBs space, but also government, civil society, academia, philanthropic, and others.
Which is so important to actually operationalizing this, right? Can you both speak to how these different actors work together and actually bring together some private investment? How do you see this envisioning, or how do you envision this, Dr. Tah?
Actually.
Okay, so we already have the compact, which has been prepared in partnership with government, because after all, the government are the recipient, and the government are those who will be implementing on the ground the compact. So partnership with government, but also partnership with civil society, partnership with the philanthropy, and partnership with all the institutions which are interested in this endeavor, to make sure that we articulate our intervention, we have a very clear division of labor among ourselves, and we have a common goal and a concerted action.
So, I think the main thing was the energy compacts, which is called for a plan by a country at the highest level of the leadership of the country, the president, the prime minister, the finance minister, the energy minister, of what things they need to do to get to their target of how many people they want to connect and how they will go about it, both in terms of financing, but most importantly in terms of regulatory policy, utilities paying on time, land ownership rights, the ability to acquire land for transmission lines, things that hold up projects on the ground. That's the first part. The second part is they presented those. A number of them got presented in Dar es Salaam. More are getting presented in our annual meetings in a few weeks' time in DC, when Sidi will also be there. And then we're working with the private sector, in fact, through an effort that was originally helped by Bloomberg, by Mike, I don't know where Mike is right now, but by him and his group of people, where we worked together on what would hold back the private sector from large-scale investing in these areas. And we came up with 5 things to work on. And the first one is actually regulatory policy and getting certainty. That's what the compact focuses on. The second one is, even if I get that, can I get access to political risk insurance, which the World Bank does offer through something called MEGA. And in fact, we're trying to figure out if we can use our underwriting instrument for him as well. Properly priced it has to be, but we're trying to figure that out. And then the third part was, can we give them more money in local currency? Because otherwise, if they're investing in dollars, euros, and yen and getting paid back by utilities in local currency, they have an unexposed hedge of a very large amount. So IFC now, our part of the World Bank Group, is up to 30% local currency financing. We're trying to get to 40. The real solution is in some markets, try and develop local capital markets. Can't do that everywhere, but can do it in a few. And the fourth was, can we take first loss in a project? So if a project is risk reward is up here, if I was to take first loss or I was to take a capped equity return, would I bring it down here? And so the investor would say, okay, this makes sense for me, and I can go into it. That's the fourth one. And the last one was, can we bring this real large amounts of private capital, which is not the individual operator of a solar company or a gas company or a utility, but can we bring pension fund money and asset management money into the place? And to do that, you have to understand that they don't underwrite individual projects. They want to see packages of securities which are bundled together and hopefully certified by a rating agency to be X quality at Y price. We just did the first one at IFC now. A few days ago, we securitized $500 million of loans like this. I have plans to do this continuously. And if we can get to mutually understood underwriting standards, then we could pool our loans and do it together. That's the next step that we're trying to work on.
When do you see that potentially?
The pooling together?
Yeah.
Very soon.
I mean, he's joined 1 month ago. Give the guy a break.
That's true. I don't want to put that pressure.
We are working on mutual reliance. So we'll have a framework of mutual reliance, which will help us to rely on what they do, and they can rely on what we do, so to avoid duplication. And as you know, in Africa, the access to electricity is not only about power generation, but also about distribution, about transmission line, and also of the grid system. And sometimes you can have also individual solar system for houses. And it can be also different sources of energy in Africa, because the poverty in terms of energy is really critical, and we need to tap all sources of energy in Africa to be able to contribute to covering the gap.
I mean, the thing is, you got to break this into infrastructure, policy, and financing. So the infrastructure part of it is you use satellite technology to actually study every house and every location in every place to see, is it cheaper to connect them to the grid, or is it better to put them into decentralized power of some type? What's going to be cheaper and quicker? You got to work that through in infrastructure. You then get to all the work to do with policy in the compacts. And then, of course, the financing part of it, which is where you talked about the private sector. This full mutual reliance that Sidi just referred to, honestly, he's been here a month, and already he's mentioned it 3 times to me. It took us a year, just so you know how hard this is. It took us a year to get this fully done with the Asian Development Bank. And the idea here is very simple. If we are both together financing a project in Gabon, if those guys have to go through 2 times due diligence, 2 types of project approvals, twice the number of work on know your customer and anti-money laundering, twice the amount of work on every procurement contract, they don't have the people or the time to do that. So we've got to make it a little easier. And if he can, therefore, I can underwrite and he accepts it, or he underwrites and I accept it, that's the full mutual reliance framework that he's referring to.
Is the political will there among some of the governments? How are those engagements working?
For the full mutual reliance framework?
Yeah.
Well, the Asian Development Bank and us finally got it done. So now we have a model. I've begun to work on that with the Inter-American Development Bank. As soon as he joined, the first thing he said is, me too. So we're going to find a way. We're going to find a way.
Do you see that happening?
Definitely, that will happen very soon. So we are really committed to, because it's a waste of resource and waste of time to duplicate our efforts. We should rely on each other, and that will make life easier, will cut costs, and will enable us to speed up the process of delivery of our services to the population.
How does this fit into the broader ambitions you have for the bank, Dr. Tah? I'm sorry, I know you're only a month in, but
yes,
I have to ask.
as you know, I have the 4 cardinal points, and my first cardinal point is about scaling up the volume of financing for Africa, because, you know, the needs of African economies in terms of financing infrastructure, financing SDGs and others, is beyond what the African Development Bank can provide. So we need to work with World Bank, we need to work with other MDBs, we need to work with African DFIs, but also with the private sector, pension fund, work to attract remittances, to work with sovereign fund and institutional investors. The second cardinal point is about reforming the African financial architecture. Everybody is talking about reforming the international financial architecture, but we Africans, we need first to reform our financial architecture. Currently, we have a scattered landscape of small institutions. We need to consolidate, we need to bring them and to have a very clear division of labor. The third cardinal point is about our demography. So I mentioned earlier about our demography, and we need to be prepared to provide the right education, the right skills development, but also to support micro, small and medium enterprise, which represent more than 90% of the economic fabric in Africa. The fourth cardinal point is about resilient infrastructure and value addition to natural resources. Africa is endowed with huge natural resources. We need to add value to these resources in Africa, and for that we need also energy, we need infrastructure, we need corridors, we need really to invest at a very large scale.
Well, it's very ambitious, and I'm very pleased to be sitting here with the two of you. And thank you so much for speaking about this. And thanks to all of you for listening to this session.
Thank you. Thank you very much.